Welcome to the Beat the Banks podcast. I'm your host, Kyle Fuller with Factum Financial, and I've got one of our key partners, Mr. David Zapata here, a fellow infinite banking practitioner. And this is our first episode on our Beat the Banks podcast. And I think it's the most important because it sets the foundation for everything we're going to talk about in the future. And so this podcast is focused on helping Americans increase their savings rate, change their savings environment, and restoring the banking function back to the you and me level using whole life insurance. Now, David, some of the problems that we're addressing here at Factum through our education is very foundational, right? And so let's talk about one of the problems that we see across America. We have an uncommonly high income living in the United States. Would you agree?
I agree.
And with that uncommonly high income also comes a very low savings rate. And this is a huge problem that we see in our culture, is that we have no problem making money in America, but we do not save enough money. And so we always start with this conversation. Americans need to be saving more money. And I think a lot of people inherently understand that, right? At their core, if you tell them this, they say, yes, I need to be better. I need to save more money. And once that starts happening, I think there's a follow-up problem. It is now, in what environment are you choosing to keep your savings? And this is where our conversation explodes, where most other financial conversations or concepts you'll hear about, it almost dies there. And one of the reasons why I think Americans don't save enough money is because the way they've been programmed to think, the environments that they choose to save in are incredibly inefficient. You can see why Americans wouldn't want to save because the savings environments are so terrible. Unless you know what we know, which is why we are so focused on education and why we love whole life insurance. So when we talk about wealth building and whole life insurance, we know with 100% certainty that whole life insurance is not an investment. We know that whole life insurance has more in common with a savings vehicle or a savings environment than any investment grade vehicle. And would you agree that that is probably the biggest misconception when people first start learning about insurance, especially whole life, that they go automatically to an investing conversation, which is why they miss all the benefits?
I think we could end up the episode there. And that idea alone that you describe and how we diagnose and what we diagnose as the problem and your view on what intentional wealth building looks like, it's fantastic. So if you hear anything, please just rewind the first minute or two that Kyle just gave you that summary and really entertain the idea. My favorite comedian in the world, Warren Buffett, says the best way to mitigate risk is to think. And at the core of what we just set out as a mission for you and I and for our team to do in our professional life, to touch people, to touch families, to touch businesses, is to help people think. We're not trying to tell anyone what to do, what's right, what's wrong. I am a big believer. I know you are too. We have this conversation many times. We are now in no position to tell people what's best for them. Only they know what's best for their family. And I love when we bring and attract that type of person to our group because
100%.
they will be people that believe in self-reliance and ownership. Those are the core values to start engaging in this conversation thoughtfully. I am super excited we're making this conversation the first episode of the podcast because it's so meaningful, Kyle. When you get people thinking, hey, tell me more about not only how much money you make and earn in a family, but how thoughtful and how intentional are you being about how much you're keeping of it, right? Where you send that money and where you store that money in what environment and what created the thoughts and the processes you use today for that. A lot of people don't have an answer for that. I have no idea where I decided that this was going to be my intentional environment, which means it's programmed and it's not intentional then.
One of the things I hear you say often too is like, everyone has a plan. And if you don't have a plan, that is your plan. And most people are just automatically doing things. And I think if people are living their lives on autopilot, that is in direct violation of one of our guiding principles, which is intentional growth.
Yes.
Everything in life we have to do has to be intentional if you want to create that abundance in those 5 areas of life, which we're always chatting about. So that also reflects your financial conversation. And we hear this all the time, but so you're like a financial advisor. Absolutely not.
Intentionally not.
Yes, we are very intentional not to be in that category of financial advisors. Nothing against financial advisors. Well, let's think about the roles that we play. We focus on education to get our clients to think. because I know with 100% certainty their investment strategy is best suited in their hands because you have access to deals. So do I. We see life differently. I should never have that influence in someone's life. We focus on the foundation, which is what is so important. Now, whether you're making 50,000 a year or $500 million a year, you do not get to the top of the wealth game without laying the proper foundation. And this is the problem that we're bringing to the forefront of America right now is a savings conversation. Because the reality is we've been in so many wealth seminars across the country and it's so interesting to just sit back and listen. I think it's a quality more people should pursue.
Yeah.
Just take a step back and just listen to what the group is saying. I've been in so many groups where the income is so high. They're making so much money. They have no problem making money, but their questions are around how do I keep more of what I'm making? How do we reduce taxes? How do we create more certainty, better protection? And this is a foundational problem that exists in America. And I think more Americans just automatically go to investing. They miss the foundation, which to me is very dangerous, but also what we specialize in. So when we talk about a financial relationship, we're here to educate and empower.
Mhm.
I want my clients, I actually want to distance myself from them so they think instead of having to come to me for all the financial advice. And this is coming from someone who's had a Roth IRA since I was 16 years old.
Mhm.
I was in that realm very early, relying on someone else. Not saying that that's bad. It just wasn't the right thing for me, right? When I started really thinking about what's going on and took the control back in my life, that's when everything started to change for me. But it starts at a foundational conversation. So let's talk about probably the biggest misconception that exists around whole life insurance, because you and I would both call it a savings environment and most of Americans, when they hear whole life, they can tell you these common things. We hear these all the time. Whole life insurance has a low rate of return. It's expensive to own. It is the worst investment of all time.
Yeah.
Now, you and I know if you ever hear someone call whole life an investment in the same sentence, that person has absolutely no idea what they're talking about because they can't even correctly identify what type of asset it is.
That's the best case, ignorance. Yeah, they don't really understand what's in front of them. I would argue that there's probably a little bit of deception in the argument too. Like, would it be easier to hide or say, no, don't look at this. This is bad, right? And just push whole life away. But if you actually misclassify it, if you create confusion in people's mind and you start throwing light half truths, right, that are deceiving, people get confused and then
Yeah.
they'll dismiss it, right? Instead of, if you're told not to look into this, your spidey senses kick in and you're like, okay, I want to learn more about this now that you're telling me not to look at it. But confusion is very powerful and very effective because if you think that is an investment, you'll never look at it accurately. You'll compare it with things that is not equivalent to, and you will not be attracted to it because you're not in the right mindset to look at it appropriately.
You'll miss it completely. And the analogy I think about now that we've chatted about before is let's take a Toyota Prius and a Toyota Tundra.
Hmm.
One is a truck, one is a car. They're both vehicles, but do those vehicles have anything in common? Like literally nothing. You use them for entirely different purposes, right? So we were chatting the other day about would you take your Prius off-roading? You could. You would have a terrible time, right? But that's
Hmm.
not what it's built for.
Yeah.
Completely different. So when people call whole life insurance an investment and they say, "Man, why would you guys buy so much of that stuff? It's the worst investment." Well, yeah, if you're using it as an investment, you would think it's terrible because you're not using it for its intended purpose. And so you have to go deeper than that, which is why we love to ask good questions. Because
Hmm.
when we're hearing a lot of this noise in the financial world, it's never want to say financial advisors or other people are intentionally misleading. There are definitely some that probably are, but it comes back to what you said. It's just a misclassification, and they just don't understand, which is why we focus so heavily on education. Because if I ask someone, "What do you know about the benefits of whole life?" Crickets.
Yeah.
There are none. That's all they can say. It's just the worst investment of all time. There are no benefits,
Yes.
and so we have this conversation here for a reason because I think if more Americans understood what we know about whole life insurance as a foundational asset, specifically for your savings, their entire world will literally
Yeah.
change.
And I'm going to state the obvious because I think it's important we start from here. And it's not common in the financial world, but Sometimes I have these conversations and I imagine that people think that I stepped out of my house and I just found a pamphlet or a piece of paper that talked about whole life outside my door. And that's all the time that I spent thinking about this. And I'm just repeating something I found this morning. But the obvious part that we should state is that you and I have spent years really challenging our thinking and being open and willing to say, are we wrong about this? How else can we understand deeper, better, more accurately? We put ourselves through seminars, through content, through other experts. So we are coming not only from the session that we've seriously taken the study and understanding of this concept, we're also putting thousands of dollars a year into premiums because we are manning the arena. We are using these vehicles to build wealth for our families. And we're just sharing our perspective on how valuable this has been for our families and our businesses. So when we invite everyone that comes across our community to think accurately about this is not an investment. If you hear us say something today, please just get rid of the idea that whole life is an investment and start
Mhm.
entertaining the idea that this perhaps is the best savings environment you could ever choose intentionally to start growing in your financial life for your family and business on a manner that you prioritize protection and then you grow as you have more and more a stronger foundation.
Absolutely. And let's dive into some of these investment or these benefits. You got me thinking about investments now. And so, if you are going to compare investments, you got to separate these conversations. So, investments would be like universal life, IULs, 401ks, real estate, crypto. Any investment needs to be in that category. Now, when you go to savings environments have to have certain characteristics.
Mhm.
They need to be liquid, they need to be safe. Ideally, they'd be guaranteed, right? So, you wouldn't have like a rental property as your savings account.
Yes.
You also, wouldn't put your savings in the stock market and say this is our emergency fund
Mhm.
because you don't have access to that capital. And so you have to separate those conversations. And once you do, and you start looking at the benefits of whole life as a savings vehicle versus where you've been programmed to save money, which most of us just save with a checking or savings account with one of the big banks, right?
Yeah.
And the reason we do that is because that's what we've been told to do. Going back to the let's think about what's going on. Now, the reason I keep money at Chase Bank is because it's liquid and it's safe in case I need it. That is the purpose of savings, right? To
Yes.
save you in time of need. So it has to be separated from that investing conversation. Now, when you insert whole life into that conversation as a savings environment, you get a lot of bang for your buck, a lot
Yes.
of benefits. And let's chat about those 8 benefits you get versus the 2 benefits you traditionally get by having a checking or
Yeah.
savings account.
Let me make another point here really quick before we jump into this. The reason why we are being so particular about talking about savings is not because you may hear people, oh, savings is not sexy. You need to be thinking about investing, growing your dollars. Great, but the reality is that we're living in a country where most people don't have $400 for an emergency saved. We just went through a period of time where we went through a pandemic, and most businesses, after the biggest
Hmm.
bull market that we've had in history, had only 27 days in average of liquidity. 27 days where they couldn't receive any income, and then they would be bankrupt in day 28. This is not you and me problem. This is not a
Yeah.
you and me problem. This is a systematically society-wide issue where we don't value the ability to have opportunity for protection and for taking advantage of all the deals that come across through liquidity. And that's why we know that savings is so important. So I love that we're going to dig in these conversations and how we amplify the habits of savings by using the right environment, which is whole life.
Absolutely. So this is why we love whole life as a savings environment because of these 8 benefits. Let's jump into the first one. The first benefit you get by depositing money into a whole life insurance contract is the constant compounding. Now, the book that we teach from is Becoming Your Own Banker by Nelson Nash. Now, in that book, he addresses a problem that I think if more Americans understood, it would change their financial destiny forever and in the amount of millions of dollars if you
Yes.
understand this principle. And what he said is you finance everything in life. That's the problem he identified. And what he means by that is you either borrow money from someone else and you pay up interest, or you save up and you use cash, which is the way I was programmed to use my money as a child,
Mhm.
and you give up interest you could have earned. Either way, the money is constantly transferred away from you, or another way to say it is you're constantly interrupting the growth of your money. When our dollars now hit our whole life policies as our savings vehicles, those dollars are captured, harnessed, and we earn a guaranteed interest rate for life. Can you have a constant compounding environment that's longer than forever?
Yes, that is exactly the point, right? Like you are making your savings environment a forever asset. That's a big idea, by the way. Sounds like a funny statement because it's confusing. The question you just asked, right? What do you mean by forever? This is really profound. If you can forever create a vehicle, create a process where your money will grow, whether you sleep or not, whether you eat or not, whether you work or not, uninterrupted forever, like you say, that is a way to create prosperity beyond what you will be able to see in your lifetime. And that's what I love. One of the things that I love the most about this idea is the effort of being intentional in my life on how I choose to build this infrastructure for my family
Mhm.
will yield fruits for my kids, grandkids, and into the future that I will never see. But if the process is transfer effectively and the stewardship continues through the next generation, those dollars that we harness today in our system remain with the control of within the control of our family and will continue to compound beyond our life.
Exactly. So compare that now to a savings account.
Mhm.
Lots of money flows through traditional checking and savings accounts.
Yeah.
And as soon as that money leaves for a vacation, for a college expense, for whatever it is, those dollars are gone forever.
Mhm.
So the first benefit you get with whole life is as soon as a dollar is in there, that is the Zapata families, that's the Fuller families for life.
Yes.
That benefit right there. No other asset has that quality, by the way. None.
Mm.
So benefit number 2 now, all those dollars that are flowing into that whole life insurance policy are completely liquid. Now, liquidity is a big benefit that we teach, especially in our wealth seminars, because liquidity is twofold. So, liquidity from the foundational conversation, you addressed it earlier. How many businesses? What's the average days of liquidity? You said 27.
27 days median. 50% have left, 50% have more.
So, I want you to think about that. We are working so hard. We're investing. We're trying to create cash flow. We're doing all these things in life. But most Americans have less than 27 days of liquidity, meaning if they didn't have income for a month, they would be in a financial burden. So I'm
Mhm.
going to go ahead and say, what good does 10 years worth of investing do and great returns if in 30 days, if something shifted, you were put under?
Mhm.
And, my family, so I graduated high school in 2007. I graduated, and then 2008, we know what happened. My dad designs high end custom homes. So he was making a ton of money leading up to that time. Everyone was building, people were making tons of money until they weren't. And as soon as something shifted, my family was one of them that didn't have sufficient liquidity on hand or savings in place to float them through what was happening. And I'm the second oldest of 11 kids,
Hmm.
and my dad lost everything. So I'll tell you, what good did 10 years of stellar returns do if you didn't have enough liquidity to float you through a crisis? And, our family was very close to declaring bankruptcy. It was a scary time because I was 19 and we had, very young kids in my family. And so the liquidity part for me really hits home because if you don't have that sufficient liquidity, what good did it do?
Yeah.
We're toast. How
Yeah.
many businesses went under during COVID because of that same exact thing?
Yeah.
Why is that not being chatted about enough? Now, on the flip though, the bigger that savings environment gets for you, which helps when you're constantly compounding on it, right? And it's always growing for us. The bigger that liquidity fund gets, we can now use it for acceleration through opportunity. Because you and I both know those people who have lots of liquidity on hand, when a deal comes across the table, they're the ones that get the jump on it.
Mhm.
So let's parallel what happened to my family in 2008 versus other families who had lots of liquidity at that time frame. I know a lot of people who made fortunes at that time because when real estate prices went down the next few years and people were buying properties for 30 to $40,000, they created fortunes during that time frame all because of liquidity. And every dollar in our whole life policies are liquid and available anytime we need them.
And the only person that controls that liquidity, guess who it is? The owner. Owner of the contract, which means effectively that you're now going to be in control of how that liquidity is used, execute, the ratios of it. So let me point out a couple things that you bring up here because I love when you talk about this. I know it's an emotional conversation for you, so I appreciate you being vulnerable and sharing with me and with all of us listening to you. I love pointing this out about Factum because it's a unique feature and a unique element that makes us so different than every other advice out in media or in financial world. We are talking about financial conversations, financial habits, financial activities, but we it's not lost on us that some of this conversation does not show up in a financial statement.
Yeah.
The effect that had in your family and the effect that had on your dad and the kids has nothing to do with assets and liabilities in a financial statement, but it was significant to family area of life, personal area of life, spiritual perhaps. It affects your faith when you're going through different difficult times like that. So the effect that being well capitalized and having liquidity, the advice that Mr. Nelson is always encouraging us in his book, is profound beyond what you can see in a piece of paper or in a ledger. So just consider that. That's how valuable this conversation is, and that's why it's so important to think about savings in a healthy manner. The second thing I point out is, we all hear the stories of people that capitalize on opportunity. And I don't know why, but we have the tendency to think that happened back in 2008. And I always remind people, do you not think that's going to happen in 2023 and 24 and 20? Best opportunity in the world is always coming once a week.
Hmm.
Once a week. It is not necessarily the opportunity, but the ability to be in a position to take advantage of it. And that comes with the right financial education, the right financial awareness, and to be well capitalized. There could be buildings in this city in Phoenix that are going for deals, but because of my lack of awareness, I have no way to execute on those deals, take advantage of opportunity. And if we look at examples of success, we need to look at people, again, to talk about Uncle Warren. Berkshire Hathaway is sitting in a significant amount of liquidity. I know Warren talks about not liking that. He doesn't want the money sitting. He wants to put the money to work and create cash flow. I love that. The fact is that it's still there because he is in no rush to make decisions. He is well capitalized to take the right opportunity that makes sense for the company when it makes sense. I would argue that that applies to you and me every day of the week.
100%. Yeah, it's not a if, it's a when the opportunity comes in your life. And if you don't have the liquidity on hand, you run the risk of missing. And sometimes we get so focused on, let's earn 10 to 20%, somewhere in this range. We hear this a lot in the investing world. But when 2008 happened, we're talking hundreds of percent. That's what we call a black swan event, right? It's a very life altering event that we cannot predict. You just know it's coming. And we're entering a very uncertain time right now, which is why we're staying very liquid on our side. We know something's coming, we just don't know exactly what it is. And those people are going to be the ones making the fortunes that have the access to cash.
Yeah. And
So,
and both sides, like you said, protection and growth.
yeah,
Yeah.
twofold.
Yeah.
Now, let's go to the third benefit. Probably my all-time favorite is the guarantees. Man, this one gets overlooked,
Mhm.
especially in our industry. I cannot tell you the amount of conversations I've had with other life insurance agents that aren't educated to the level we'd ideally want them to when it comes to whole life. Because this is the conversation I get. Oh, you sell whole life insurance. Why do you like whole life? Because the guarantees. Like, you almost just want to sigh. Like, yes, that's exactly why we buy them. That's like asking someone on the beach, "Hey, why are you wearing those sunglasses to keep the sun out of your eyes?" Like,
Mhm.
that's the intended purpose of the object. Yes, we like the whole life because it is literally the only asset that exists that has contractual guarantees for the rest of your life. Think about that. That means the cash value increases every single year, guaranteed. The death benefit will increase and be there every single year. Your premiums are guaranteed to never change, no matter what your health does. Do you know how amazing it is to have an asset at your foundation that has actual guarantees for protection, stability, certainty? Going back to your comment you made previous, that doesn't really show up on a financial statement, right? But
Mhm.
the peace of mind, the protection, the certainty that that provides, does that not put you in a better place emotionally for you to make better options and decisions in the
Decisions.
future?
I've been sharing this idea with you, like, when we talk about energy, energy cannot be destroyed or created; it's transferred or transformed. And I've been reading this idea in a parallel to risk. Risk cannot be created or transformed. You're going to die, you're going to die, you're going to die. We all have a 100% probability we're going to die. So instead of avoiding the conversation, why don't we deal with it and associate our best behaviors for saving and in the savings environment with a vehicle that is guaranteeing the only certain event in our lives, which is passing away.
Hmm.
Other part of it is when I use this vehicle to keep my money as a savings environment, I am transferring risk effectively to an entity that has the ability to accurately price what that risk is worth to them. So I am very, very happy to become an owner of an insurance mutual insurance company by paying premium and engaging in this contract with them. So the guarantee that they have for me is that as long as I continue that same pricing of the risk, that premium that is level throughout my lifetime, they will be the custodians and the guarantors that my growth in my cash value is there every day, every month, every year, that the death benefit is going to grow along
Hmm.
if you set up that properly. More importantly, it's a way for me to put myself in a place where I can create prosperity and abundance for my family and my business from a place of strength. I
Right.
am not dealing with FOMO, and I know you're not either. I am at peace that all the capital that I'm putting in the right environment is there ready to deploy it when I'm ready for it. And I'm doing it from a place of strength, not desperation, not fear, not anxiety. I don't care what's happening around me because I know I have that transfer of risk and that guarantee. That is a huge, huge place, and it's only going to get better. That's part of the guarantees.
Right. And this is exactly why we separate it from an investing conversation. This is why this asset goes at the foundation into your savings strategy because of the guarantees. If you were going to build a skyscraper and you needed a strong foundation, wouldn't you need the strongest one possible? So it would make sense to select the only asset with actual guarantees as your foundation. And this is exactly why we love it. Now, let's go to the fourth benefit, the flexible loan provision. So, as you and I are saving money into our whole life policies, they're accumulating, building that cash value on a guaranteed basis. It's always liquid for us. You can borrow against the cash value of your policy. So, we want to be careful with our words because you'll hear it out there from a lot of marketers. People will say, why would you borrow from yourself? Why would you pay yourself back? You're not. You are borrowing against the cash value, utilizing the flexible loan provision, which is why your cash gets to continue to earn uninterrupted growth because you're not using your money. You're using the insurance company's money. Your cash value is the collateral. And when people make that distinction, they say, oh, okay, that makes sense. Now you're two players in the money game. You're operating as the banker, but also the consumer in that instance. Now, with that flexible loan provision, this is what we call a guaranteed line of credit. You and I can get access to that loan provision no matter what. Even if the credit's low, we're filing for bankruptcy, whatever it is, you can always rely on that loan provision to be there for you. No other loan vehicle or, anything from a bank, they cannot offer you a guaranteed line of credit, especially one that's unstructured.
Mhm.
Now, what we mean by unstructured is you determine how that amortization schedule is going to be paid back. You could be interest only for 60 years if you wanted. That to me provides you ultimate control in the money game.
Yeah. Yeah. I love having this conversation with business owners. It's so intuitive for them to know, man, this would be so valuable for my business because they are under the weight and the oppression of whatever entity they're using, whether it's a private loan or a harmony loan or a bank. The other person, the other party is always the loan officer dictating the terms, dictating the formulations, the circumstances, and business owners will feel so much more confident and free if they also had the role of loan officer for their businesses. We all need liquidity, but how we access it in what terms is something that we overlook often. And I'm going to put the opposite side of that as well. As great as it is, and this is us now having the experience of working with a lot of people, being responsible practitioners, as long as this authority and this ability is, it is also a responsibility in proper stewardship. The fact that you can
Yeah,
access the money in your own control in your own terms doesn't mean that you should abuse that ability.
correct.
And something we're very intentional about is teaching people to be proper bankers, to be good bankers, like
Hmm.
Nelson used to teach. Having this ability is also a responsibility. That's why the title of the book is Becoming Your Own Banker. I always tell you, and I probably sound like a broken record at this point, but the letters banker are highlighted and capitalized in red. I point people to the word becoming.
Yeah.
That's key to me. Becoming is also knowing that as a steward of this money, I have to responsibly set a schedule of repayment because I want to continue to replenish my access to capital to stay liquid. This is a profound decision that you need to make to become the person that is capable of managing that flexible loan provision properly.
And it's why we focus so much on stewardship and education. That
Yes.
is not a feature you want to abuse with this system,
Mhm.
right? The next benefit, number five, is privacy.
Next.
Next, we can just skip that one, right? Now, we like to joke about that, but because whole life insurance is not an investment, it doesn't show up on any type of IRS report. We don't do we claim any of the growth inside our policies? Is that reportable?
Mm-mm.
None when we take policy loans. Completely private, doesn't show up on a credit report. This is one of the most private, if not the most private asset you could own. It almost functions like a pre-engineered simple trust. You got a payer, a beneficiary, an owner, there's an insured in there. So if you look at the way that life insurance is constructed, you would look at it almost like a mini trust. It is so private, it is so protected. And one of the reasons why is because it's not a government sponsored program. It
Yes.
wasn't created to be a tax loophole or something. It was around predating the IRS and the income tax. It is a private asset that is owned from person to person. We love to talk about this at our wealth seminars.
Yes. Private contract between two parties, an American idea, and how do we distribute risk and protect each other as a community from the possibility that one of us dies prematurely. There's beauty on this, on how we build community, how we support each other. And then when you add those American values to the idea that this should also be private protected, I think in today's world, this is becoming more and more
Mm,
relevant to people. I would like to have a portion of my savings, a portion of my capital within my control and without disclosure to any public record. You may be listening to us and also asking, well, I don't know anyone doing this or talking like this. I've never heard this light on whole life. Guess what? This may be one of the reasons. It's a
yeah.
private contract. People don't have the obligation to educate you or disclose how they're using this. The wealthy, the banks, the corporations on a daily basis see this as a common vehicle for their
Yeah.
profit savings, but they don't have to disclose it because it's a private contract between parties.
Yeah. And you've got personal experience with that because I know, before you got into your life insurance career, you were an engineer with GE
Mhm.
and you saw stuff there that, you would say the common people at GE had 401ks. The uncommon people at the very top had life insurance products. Isn't that interesting?
Fascinating.
You
It's
know, there's
fascinating.
there's a reason why this information this used to be common, by the way.
Yeah.
And so there was a transition, which is why a lot of people are saying, well, I haven't heard about this before. Well, whose fault really is it? Are you searching for more like we were? Are you
Mhm.
intentional about that? Because this is there. It's been around a very long time, longer than anything else we have today, right? These big mutual insurance companies, it's there. It's been sitting there in plain daylight, but people cannot get past the idea of it being an investment, which is why they overlook it and they skip it. That's why they don't know.
That is a great point you make there. It's like it goes back to the risk transfer, right? 97% of the bottom of corporations across the United States, regardless of industry, location, etc., they are transferring risk to themselves by managing these qualified plans on their own, where they are obsessed by making a million, two, three accumulation process where there's no clarity on what the distribution will ever look like.
Mhm.
And yet the 3% at the top, the executives that are making these decisions, transferring risk away by saying, I would like to guarantee my lifetime income with insurance products.
Right.
I saw people calculating in their desk in early retirement when they were when there were conversations about layoffs, volunteer to retire and doing math to see if they had enough income to not outlive their retirement accounts. At the same time that some executives were living with $4 and $5 million of guaranteed income on a yearly basis through insurance products. It's fascinating to me that
Mhm.
none of us question that, and guess nobody's looking for it,
Right.
and because it's not publicly disclosed, openly disclosed, it's not a conversation among us.
Yeah. And one of the benefits that we love is the privacy. There's a certain emotional benefit that provides, knowing that we have access to capital with all these benefits, but it is completely up to us on who we want to disclose,
Yeah,
how much insurance, what cash values we have. So,
absolutely.
sixth benefit, passive income stream. We know the number one rule of winning the money game. And for most people, they want this, they love the idea of creating abundance in those five areas because that's when you wake up every day and you feel like, man, my life is so amazing when you have abundance in those five areas. And the problem is that that vision takes cash flow. It's a certain passive income number coming in that allows you to travel, allows you to give, allows you to spend the money you want. But middle America has been so programmed really by banks and Wall Street to think in form of accumulation, deferred for 30 years. And so we know that the key to winning the money game is cash flow and passive income. Now, does a typical savings environment like a checking account or savings account ever produce any type of passive income for you?
Nope.
Never, because there's really no growth rate attached to it. The only benefit is it's liquid and it's safe. And so our policy systems are growing thousands of dollars net, that's income tax free, per month. And each year we keep depositing more. There's more constant compounding going on. So that passive income number right now keeps going up on a guaranteed basis. Now, that number, if you take that out into the future when we're 70, 80, it is astronomical how
Yeah.
big that gets. Think about all the money that'll flow through our lives, David,
Yeah.
and how much of those dollars are being captured in our whole life, continually earning for us. You can convert these policies into a very big passive income stream later in life.
Yeah. This is an idea that has taken us a while to capture, right? Because we saw this first described by banks as an improvement to their income statements. And we wonder, what do they actually mean by that? What does that mean at the you and me level? It's fascinating because it's a complex idea. I think it's
Hmm.
an advanced idea in this conversation. The fact that the guarantees guarantee themselves that your cash value is going to grow and that you have a flexible loan provision that allows you to access that money within your decision and power, right? Effectively says that your income statement will see growth because more cash value will show up and it will be accessible to you on a guaranteed basis. That is, as you said something really quick. I'm going to highlight it again. You said net. That
Yeah.
is net of taxes, net of fees, that is accessible to you. So when you compare this and you're comparing it to an investment, you're wrong. It's not an investment, it's a savings vehicle. But on top of that, you're comparing a lot of times gross numbers with net.
Yeah.
So think about that. The second part of it is, how much peace of mind do you have by not having to disclose any of this with the privacy aspect of it? This is income that I've heard you use the expression somebody describing as phantom income.
Hmm.
I am not telling the IRS at all about this growth because it is money that is inside compounding uninterruptedly in my insurance contract, which is a private contract. There is a significant amount of benefit we both get from that because it's our ability to fund next month more growth for our businesses or investments, however we're going to finance the things in life, but also because it's, you know, to our discretion. So
Yeah.
very powerful. And if the banks think this is a major benefit for them, what makes us think that it wouldn't be for you and me?
Absolutely. And you hit something on there that comes right out of Nelson's book, Becoming Your Own Banker. Just the misclassification again, right? Because the reason this stuff is not reportable, it wasn't like it was built that way to be. It's life insurance, and life insurance is put in place to replace something. Okay.
Mhm.
It's to replace your human life value in case you die prematurely. But if it's designed properly and you understand how to use it, you would look at this as a consumer and say, that is the greatest banking tool in the world.
Mhm.
And there's a death benefit in case I die. That's literally how Americans would call this if they could get past that it's not an investment. And the reason none of it's reportable, all of that, it's not like it's some loophole, it's life insurance. And that's why it stays so private with all these benefits, the passive income, all of it. And so let's go to the seventh benefit now, the tax free transfer of wealth, the income tax free. So there's also a death benefit in this policy that is increasing every single year. Now, we've been doing this a number of years. Our death benefits now versus where we started are significantly higher. By the time we realistically pass away, there's so much money that'll be transferred to generation two, which will be our children. That tax free transfer of wealth is not an if conversation, it is a when. Like we all have to pass away. So why are we not ensuring an event that has to happen? And this to me is one of the best ways to transfer wealth from generation to generation. It greatly simplifies estate planning. But more importantly, it's a transfer of legacy that's building for you 24/7.
Yeah.
And when that transfers to the next generation, this is why we're so big on stewardship and education. It doesn't do our children or the next generation any good to just hand them a ton of money. You have to have the education and stewardship there so that when they receive it, they are someone that can actually handle that type of money. There's a multi generational conversation here that needs to happen. That is a solution to a multi generational problem we have as Americans, which is terrible savings and terrible savings environment, right? Rates and environment.
Yeah, both of us love this part of the conversation because we are family man. We love our children, so we see our lives as a way to create productivity and value that will just enhance their possibilities with life. They can be and become. I want my kids to become whoever they're meant to be, unfold their potential, whatever mission God has for them, and I also want them to be bankers.
Yeah.
That's the second part because I know that they will have the need to finance everything in life. And they also need to become the stewards of the value they receive for the next generation. By the way, if this doesn't resonate with you, this is not exclusive to kids and family and grandchildren, right? But if you have a cause that matters to you, if you have an environmental cause or a human
Hmm.
rights cause, if you have a church that you support, humans around you, the people around you, the planet around you can benefit from receiving value that you create throughout your lifetime, and then that you can transfer once the only certain thing happens to you in life, which is passing away,
Yeah.
right? The fact that we can find a vehicle that takes that value and transfers it income tax free makes it only more efficient. So why not?
Right. And it always breaks my heart when we see these GoFundMe accounts. And it's like, how are we, especially we both have young families, how are you not getting some type of insurance in place for an event that has to happen?
Yeah.
Right. And so just another benefit that's thrown in there. Like we're on 7 of 8 right now. This is a savings environment. Imagine if a bank promoted something like this for its consumers. How beneficial.
And I'll share something personal since you share something about your family, but I'm a product of this. I've had firsthand experience with this. I've shared with you. My mother passed away when I was a teenager. My brother was 9 years old. So my young brother was a baby, right? And my mom passed away. And the next week, Monday, my dad went to work and we went to school.
Yeah.
Like life had to move on. We didn't have life insurance. In my 30s, as I become a parent, is when I've had the realization that I needed to take a step back and have conversations with my dad and my brother to mourn my mom's death. 15 years later,
Mm,
20 years later. And all this comes down to the fact that because our financial life didn't have the protection to give us the space to go mourn when we needed to
yeah.
back in 2003, we're doing it now as adults to try to cure. And this conversation doesn't show up in a financial statement, Kyle,
No.
but these are real scars, real life situations that I'm trying to amend so I don't transfer that pain to my kids. And I heal the little boy in me that dealt with that back then. I can see how if something, God forbid, happened to me, my wife and my kids suffer tremendously my loss.
Yeah.
But at least I have a guarantee that they will have the space to go and retreat and do whatever they need to do to try to get back on their feet and move on in life. And the financial means will not be an excuse not to have that opportunity.
So powerful. And when we are helping families here, we always say we're here to serve families and protect them. And this death benefit is part of that protection of the family unit, which we think is vital to the success and well-being of Americans. Gosh, I love that. Thank you for sharing that. It's powerful. This last benefit, number 8, we call whole life. One of the benefits is having a very high savings rate. I'm going to go ahead and say the highest savings rate from a savings environment. Now, you said something earlier. People tend to compare gross to net. Anytime you see an insurance illustration, it's always net. It is the true value, which is one thing I love about whole life insurance. But if you're going to compare it to another asset, net, you're getting about 3 to 4% in most whole life contracts. And most people can hear that. They hear whole life 4%. Most people can regurgitate that. And that's where they start to compare it against 10% they're earning in real estate, 8% they're earning in the stock market. So they naturally go, oh, it's a low rate of return. That's terrible. But remember, it's a net number, net of fees and taxes. When you calculate that, which is why we have our video courses online to show you the numbers using truth concepts, you would have to earn 6 to 7% every single year gross to match what we get inside our insurance policies for how long?
Year over year over year over year forever.
Forever. And this is the biggest distinction. A lot of times people say, well, I've got a CD right now that pays 6%. Okay, great. Net or gross? And for how long? See, our whole life policies are earning that 3 to 4% net forever.
Mhm.
That is a very long time. The time variable cannot be taken out of this conversation. What does that do for you? Interest rates are up, interest rates are down, but the whole life is so steady the whole time, which is why we stick it at the foundation. If you start looking at that monthly, like I said, our system of policies are growing thousands of dollars income tax free a month. Do you know how much cash you have to leave in a bank account to earn thousands net a month? And that number never goes down, by the way.
Yeah, and now it gets fun because you intertwine these things together, right? Like I love what you say. I bring this up often. The duration aspect is fascinating. Oh, I can buy treasuries right now and roll those treasuries 30, 60, 90 days and get a great yield. Great. Guess what? That's gross. You're going to have taxes on that. So it's not net. Sure. But what were you doing in 2016, 15, 14 when we had zero interest rates?
Right.
What happens to interest rates next year, next 10 years? I don't know. What I do know is that I intentionally want to set my savings environment to be a forever asset where I control that internal rate of return on a net basis. But on top of that, guess what, Kyle? I am not going to interrupt the compounding by accessing the money. If you have a CD or treasuries and you sell those or liquidate the CD, you interrupt compounding.
Mhm.
On top of that, I don't have to ask permission to anyone to access my savings in this vehicle. I am my own loan officer through the flexible. Once you intertwine and see the power of these things combined,
Yeah,
and at the core of this, the simplest expression of this, whether I need protection through liquidity or whether I want to go after opportunity through liquidity, I am in a position to do so now, next year, 10 years, until I'm done.
forever. And so when you take a step back and you actually get some education under your belt, you see these 8 benefits that whole life offers as a savings environment. And this is why people in our community are so excited to save 10%, 30% of their income because it's going into an environment that is working for you with these 8 benefits. When that happens, your business will change, your investment strategies will change, your consumer life will change. All of this changed with a better savings environment. And this is why we're so passionate about this asset and education. So, just to bring everything back into at the start of our conversation, whole life insurance is not an investment. We believe that it is the world's greatest banking tool, the greatest savings environment. And if more people take the time to learn, they would literally transform their lives by setting this asset where it belongs at the foundation because of the guarantees and those 8 benefits. And so, if you enjoyed what you heard today, make sure to subscribe to our channel and also check out our website, factumfinancial.com. We have an entire infinite banking and whole life video series so you can see all the numbers, everything's on there. Make sure to subscribe so you get all of that content.